Well, market participants wait with bated breath as US Federal Reserve Chairman Jerome Powell is set to address the Jackson Hole Symposium later today. Given that his address comes a day after South Korea increased interest rates for the first time in 3 years, investors would want to know if the central bank of the world's biggest economy feels the same way. The Bank of Korea yesterday became the first advanced Asian economy to raise interest rates after the pandemic, citing worries about asset bubbles and other financial imbalances. It went on to say that monetary policy accommodation will continue even as uncertainties over COVID-19 continue to prevail. Analysts tracking the Asian country now believe the next increase will come in November, with the tightening cycle continuing well into 2022. However, should investors on Dalal Street worry about policy tightening back home? Let's go to Gaurav Dua, SVP-Head of Capital Market Strategy at Sharekhan by PNB Paribas, to understand if the move's ripple effects would be felt in India.
In past about 6 to 8 months, there have been around 10 to 12 economies which have seen a slight increase in the interest rates, and that could be because of the issues led by inflation. So it is not that Korea is the only place where the interest rates have actually gone up slightly. However, we have seen wherever the interest rate has actually gone up slightly, stock markets have still been doing well. Talking about India, what we have seen is that to anchor the inflationary expectation, there could be a rise in the reverse repo rate down the line. But we believe that the interest rates overall will remain low, and RBI is extremely clear that they want to support growth, and they believe that the inflation is more of a transitory in nature.
Well, with advanced economies beginning to contemplate interest rate hikes, it would be important to see how emerging markets like India react to the developments. In this regard, global trends will dictate Dalal Street's movement today. Apart from that, stock-specific triggers, news flow around COVID-19 and vaccination, and fund flow will sway the markets. Yesterday, markets ended flat amid the F&O expiry of the August series. The BC Sensex closed at 55,949 levels, up 5 points, while the Nifty 50 ended at 16,637, up 2 points. Both the indices have advanced 6% and 5% respectively during the derivative series.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com.